Okay, I think we are finally live. Good evening, everybody. Sorry for the wait, everybody. Let's get started. I am excited tonight, finally. Event number 2 of our wealth. It took us only 1 month to get in part 2. So tonight I'm super excited. I'm going to share with you guys stuff that are real money case studies, and hopefully that will help you. So good evening, everyone. It's Thursday. Before a long weekend, I'm going for the mountains with the family. The entire weekend we are going to trail. So let's hopefully help everybody and share stuff that have helped me over the years, guys, to create true wealth with tax efficiency, asset protection, using the stock market, the options market, real estate, and being an entrepreneur. Okay, so let's go, and let's go right now. Let's see if we can have the share of the screen, and boom, and bam. Okay, so tonight we are going to go on really the part 2 of what I explained last time, and I'll take Q&A, guys. I want to do it like as a informal session. Obviously, I'm live. It's not rehearsed. You know, I have only one shot, right? So it's how to help you to escape the rat race with real life case study of stuff that I've done, you know, personally through my life, and hopefully it will help you. I know that there's a lot of precious nuggets that you'll get tonight, stuff that I paid $300 to $500 an hour with estate attorneys, asset protection attorneys, and tax CPA and lawyers, and blah, 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 and blah, blah, blah. So hopefully the stuff that I've learned over the years, banging, boom, 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 my head against the table, you'll avoid. Those are the stuff I like to share with my kids. We have 5 kids, young kids between 16, 21, and there's 25 too, okay? 4 boys and a girl. So hopefully this principle will help you. And I am like you guys. I'm still in the journey to find my life purposes, you know, to be in that journey of life together, guys. So hopefully the stuff I teach you and share with you will be powerful and resonate with you. Okay? So last time, just we recap a little bit some of the key principle, guys, because that's super important. Last time we spoke, right, about a couple of things, okay? We spoke about the importance of doing things, guys, in a different way from everybody, you know? If you are going to do the stock market, you know, and put all your money in day trading, and when the statistics of day trading is 90% more or plus of the day trader lose all their money, you are going to lose everything, okay? And those are principles that I've learned late in life, guys. Don't forget, I started day trading, swing trading, and long-term investing when I was 22. Worked for a prop firm, worked for an hedge fund, you know, and it's not until I was really 37, guys, that I really understood some of the key principles of wealth. You know, being a good day trader, being a good trader, being a good investor in the stock market doesn't mean you are wealthy. At the end, what will count is what is your legacy, your net worth, and the things that you can accomplish that are aligned with your life purpose and what you are meant to do in life, and be the best at it, okay? So to do that, you got to do things a little bit differently than everybody. You need to do strategies that are a little bit different. You need to be a little bit of a guy, you know, that does stuff that are a little bit out of the box, but that are also proven principles over the years, year after year. Now, this is from the game Cash Flow 101. My kids and I have played that game many, many times. I highly recommend you play with your kids. It's so much more powerful than the Monopoly. It's not very exciting, but it's the most closer game you can find to life to really get out of the rat race. So at the beginning of the game, they give you a card, you have a profession, right? So you have income in the game, and you have expenses. You have a mortgage, you have a car loan, you have credit cards, you have salaries, you have income, you have expenses, you have assets, you have stocks, real estate, and you have liability, and you have good liability and bad liability, like bad, a car, credit card, bad. Okay, school loan, bad. Okay, bad, but unless you find a great job and you pay your school loan pretty fast. Good, home mortgage, bank loan, assets that produce income. This is where you want to fixate. So what happened in life? Throughout your life, your income is going to go up. You are going, especially if you have a W-2, you get up in your company and up, hopefully, or you become an entrepreneur, which have unlimited earning potential. I have been myself, an entrepreneur since I was about 22. The only jobs I've held in my life was a product manager in Miami for Canon, and I worked for Sprint in Paris as an internship. And for the rest of my life, I have been a trader, investor, work in prop firms, work in hedge funds, and be the founder of the day trading zones, Think Well Differently. And I'm also a K1 partner. So K1 means you are a partner with other people and other companies. You're just a partner. I'm like a silent partner. I give money and they manage the company. Okay? So this through your life, so here, you have income. So you can have, I have K1 income, I have dividend income, I have naked put income, right? And then you have those assets here, cover call income, right, in the market. You have, okay, we talked about dividends, right? And all of those income, your W-2 income, or you are a W-9, or you are, a 1099 consultant, or you have your own business, all this income minus your expenses, right, that's your cash flow. So cash flow is the blood of energy in your life. And I'm going to share with you tonight at the end of the presentation a book that really, really made a big impact on me. And by the way, here's the book. We'll introduce the book, but later on and why I love it. Okay? And it's not necessarily a book about how to trade, because that you will learn much more by watching our 200 videos plus, or options market, or option strategies, real estate. It's really an alignment of philosophy and value on the way you manage money. It made a really profound impact on me, and this is what I want to do, is if I can every month share with you at least one book. My goal is to read a book a week, guys, whether it's Audible here. I have a great Audible that I have been almost done called Top Leaders, where top leaders are being interviewed. Fantastic one that I read there. I don't know if you guys can see on the feed, but this is a great Audible that I recommend for anybody. How to Lead series of interviews with Jeff Bezos, with Tim Cook, with Ken Griffin, the founder of Citadel. So many great people there. And so my goal is to share with you profound knowledge from others and my knowledge over the months, month after month after month, week after week after week. So the way we are going to divide this is as follows. On Thursdays at 4 p.m., I will come give you a nugget, whether it's a how-to in the stock market, the options, the SPY, the SPX, what I am known for, right? And also wealth creation by buying assets, by selling deep out of the money put using our tools or your own support and resistance, to get a cost reductions and over time create assets that produce income. But you are not going to get out of the rat race, everybody here, until your cash flow, is superior to your expenses. When your cash flow is superior to your expenses, right? Your income superior to your expenses, you get that cash flow. But you need to trade time for cash flow. And over the years, as we go through the trifecta of income, we go through the real estate principle I'll show you, and some stuff that I'm going to show you tonight, hopefully in real estate too. You can accumulate wealth over time, and this wealth will create assets that produce income that will be more passive. There's not such a thing as completely passive, guys. So forget about it. The most passive way of making income that I know is I sell a deep out of the money put on any of the stock by using the day trading zones and adding a safety of margin, and I wait every day for that time decay to work in my favor. It works in my favor, it works in my favor, it works in my favor, it works in my favor. That's the only way. But if you do real estate, if you have a company, right? Even if you manage a portfolio of stocks, you got to watch it every day a little bit. You got to attend. It's like a flower that you need to attend and put some water so that it flourishes. Wealth, everybody needs to be attended every day. Every day you need to watch your Mint. I use Mint, to manage my income and expenses. Well, I'm not going to show my Mint, obviously, but okay, I use Mint. And I track, because I have many accounts, my broker accounts, my bank accounts, my expenses, my credit card. So every day I put water in my wealth. I want to know where the energy is going. And I'll explain why this is very important, the concept of energy, life purpose, and alignment. So the goal at the end, guys, is not to do one good trade. It's not to be the champion at the SPY, SPX, although it has changed my life lately, as I've showed you in a couple of videos. It is more about what will you show at the end of your life between your income, your expenses, your asset, and will you be out of the rat race by having passive or at least asset producing. So I think this is really the key word. Asset producing income, asset income producing, that will be fairly passive if possible, but I don't know anything passive in my life, superior to my expenses. That's where you are truly out of the rat race, because then you don't trade time for money. So the definition in the game here, being out of the rat race, is when your passive cash flow, right? It's all passive cash flow, and that's it. You live out of passive cash flow where your passive income, right, here is superior to your expenses monthly. And then you don't have to trade time for money. And what you learn tonight is the concept of that book that I love, is that time is really energy. Each time my wife gets in the car at 6 a.m. in the morning to beat traffic in Atlanta, and she's a nurse, and go to the hospital where she works and do her job and come back and spend an hour plus or an hour and a half in the car, that's energy for money. She goes, she works, she trades energy, time for money. You get out and you become wealthy, truly wealthy, when you are not trading anymore time and energy for cash flow, for real cash flow from income producing assets. And that's very important, guys, because at the end, that's all it matters. When you and I meet in 20 years, 30 years, I would rather you say, Mark, not only did I did well trading and investing with the community, but most importantly, I want you to say, look, following some of the principles I've learned from you, I've learned stuff that were helpful. We and my family were able to sustain a decent retirement. We were able to sustain being out of the rat race. That's really the end goal for everybody. Okay, so how do you do that, really? But if you look carefully here, you have income. Okay, and I told you there's different type of income. You can be an entrepreneur, right? You can be a W-2 income. You can be a 1099 income, right? And then you can have more passive income, the dividend, real estate rentals, right? Monthly rental checks, your dividends from the stock market, which, by the way, are taxed as long-term capital gain, which is taxed as a lower rate. So mastering taxes, asset protection is part of really be in mastery, in control of your destiny, guys, by improving your cash flow, by paying less taxes, by being protected, blah, blah, blah. Dividend, rentals, there's so many ways of creating additional cash flow. For us, we sell puts, right? You can do credit spread if you like it, right? I prefer selling the puts, even though I like Iron Condor on SPX, right? There's so many things that you have to do, but you need to be focused. I am known for the income part to do SPX and SPY, right? And then I take that money and I reinvest it for the long-term investing, the trifecta, which is, where you sell put to get the asset out of the money, dip out of the money puts, right? You get the asset produce another source of income, which is the cover call at resistance on your zones. So puts, dip out of the money puts at support, right? You get the asset, then at the calls. And you have to be careful because the true of all of this is selling the cover calls are the dangerous part of the trifecta. And then sometimes you get rewarded with a stock that also pays you dividends, which is nice. It's an additional source of income, okay? So let me talk about a couple of things and I'll share some of my experience, guys, and hopefully that will help you, okay? Because this is really the stuff, guys, that I am super pumped about, I don't mind wasting an hour on a Thursday night, although I'm sorry it took a month because there was kid stuff going on Thursday, there was wife stuff going on, but right now the stuff I'm going to share hopefully are helpful. So when you look here, you have 3 ways of making money in addition to your job. That's it. There's not 5, there's not 10, there's 3. You have the stock market, right? There's real estate, and you can be a hustler. I have a gig. You can have a hustling gig on the side. So, for instance, you could be a W-2 plus a hustling gig on the side. You can be a 1099 and get another hustling entrepreneur gig on the side. Okay? And these are the 3 poles. And it's very difficult in life, guys, to be a master at all of them. Being great at the stock market, being great at real estate, being a great entrepreneur. There's so much to learn, first of all, in real estate. I've done also some real estate for the past 20 years now. And I tell you, it's very hard to flip a house. It's very hard to do what they do, a contract assignment. I forgot how they call that, but there's a word for that where you put a house under contract, you reassign the contract to someone else for a fee, right? So it's like you find a fee you find deals for a fee. You flip, you renovate, you flip, or you buy the asset. They call that the BRRRR strategy, where you buy, you repair, you rent, and you repeat, okay? And this is also a good strategy. But I'm going to show you that all over my life in real estate, the best thing that I know, that I have done in real estate, guys, is I have bought my own house. It appreciated. I bought a pre-construction with a builder in Fort Lauderdale at 125. The house went to 499. Anybody that knows the area, it's called Weston in Fort Lauderdale. I was one of the first guy buying a house, a 3-bedroom, 2-bath with my wife for $125,000. So look at the story. So $125,000 home price. Sorry, I have to go back here. And look how it went. So first house number 1. No tenants, no toilet, primary house, right? So what did we do? House number 1, purchase price, $125K. Down payment, we took an FHA, we didn't have enough money, 3.5% on the house, everybody. So we put something ridiculous. I think the entire house, right? The entire thing did cost us about $11,000 with the down payment, the closing cost, something ridiculous. We got in for $11,000. We pay our monthly payment from 1996, I think it was, to 2002. In 6 years, the house went, 2003. So the house went somewhere in the 360. What did we do with my wife? We looked at each other and we said, well, we can take our money and run. We put $11,000. We get out at 360. We just made a cool $349,000. You subtract real estate fees and everything, let's say 320. So I made $320,000, but we did something even better, guys. We did something even better. We felt that the area was appreciating and appreciating and appreciating. What did we do? We refinanced this house, and we took the cash, enough cash, to buy the house in Atlanta, house 2. So I put $11,000 of my own money on house 1. I refinanced. I think we got out something like $150,000, something like that. So we got $150,000 in cash. We left the rest of the equity, which was 200, whatever it is, right? And we used that cash to buy house number 2. House number 2, a little different. We put, this time we put, that was a $250,000 home, and we put 20% down this time, okay? Because we didn't want to go FHA, we didn't want to pay the PMI, blah, blah, blah. We put 20% down into this house. So look, this is my journey in real estate, guys, up to now without tenant. But hold on, it gets to the tenant part. So we put 20%, we have the second house, $250,000. The market in Atlanta didn't do anything from 2002 to about 2016, 18, something like this. Okay, so anyhow, the first house, what did I do? I rented. So my mortgage, my payments, my monthly payments on the first house, I remember distinctively, on a 30-year mortgage, and we had very, very minimum in the house was about $1,200. We rented the house for $1,900, guys. Okay, in Florida, it was like, it's a very hot, Weston is a very hot area, so $1,200 for $1,900. So I was making $700 cash flow every month in a pre-construction house, which means I didn't have repair. It was perfect. We chose the tenants. We put a property management. The entire time we were in Atlanta and I was still married, we were making $700 cash flow in the house. We had a house that went from the 360 to about almost $500,000, guys, in 2007 and 8. In 2007 and 8, we got lucky. I was in the mortgage industry. I was a partner into a mortgage company, everybody. And we were doing a lot of prime loan, subprime loans and stuff. I sold the house. We sold the house. We took the money. Ching, 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 ching. We made a lot of money in this house. So you can see from the 11K to the 499, whatever we made, let's assume we made about $400,000 in the first house. The second house, didn't move like for almost 14 years, guys. Like it didn't move. It went through the drop in the market, very small increase. We were able to sell, even my ex-wife stayed in the house through my divorce. We were able to sell the house around 425, I think it was, something like this. So let's say we cashed 150K. Then my wife and I went separately, so now we have 550K. So this one here is completely sold. I have cash. I bought my own townhome. So now we rinse and repeat. I go back. I have my own townhome, right? 3-bedroom, 2-bath in a nice area by my house. And I bought this townhome $180,000 at the time in 2011. So I got lucky. Again, it's all about market cycles, guys. If you time these things in the market cycles, which, by the way, market cycles, everybody, I urge you to read the Mastering the Market Cycle from Howard Marks. That's really what will change your life, guys. So a lot of the stuff I'm sharing with you today night is kind of really my true story, and hopefully it will help you. So look, with minimum risk, everybody, minimum risk, we increase our net worth from $11,000 down payment with an FHA to about $550,000 in about 4 and 6, 20 years. So I know it takes 20 years, but this is my point. People underestimate what they can accomplish in a day, in a week. They want to take a $2,000 day trading account and bring it to $500,000 in a year, in 6 months. That's not how it works. You got to be patient, guys. True wealth and a lot of wealth will be achieved in 5 years, 10 years, 20 years. You can accomplish a lot of stuff. Look at Warren Buffett. Most of his fortune has been done since he was about 55 to now 80, because the compounding effect of that fortune keeps on going up, compounding at 20% compounding, and that's where he made most of his fortune. So hopefully this is helpful, because I want you to understand the gift of time. So all you have to do, look, we can take some notes from what we discussed about. A, what are the income producing assets that can be used as safely as possible? Well, real estate, primary residence, as I've told you, I just showed you how I and my ex-wife and myself now have created somewhere. Real estate, primary residence, FHA, because I didn't have any money, guys. I came in the US with $2,000. So FHA 3.5% to 550K plus. Because, by the way, I have not finished the story. I bought my townhome, sold my townhome for another additional $225,000. So plus the townhome, 225K things. Well, of course, I had to split the 550 with my ex-wife. So, but the point in the matter is, you get it. There's a lot of wealth you can do. Just you live in a place, you refinance, you leave the previous place. If you think there's potential, it's in a good area for rent, and you let the market keep up with inflation. Rent keeps up with inflation, and the increase of the house at the bottom of the cycle keeps up with inflation. Okay? Now, 2, stock market. I had to work for someone. I had no money, guys. Cannot be more simple and more genuine. I had no money. So I work as a product manager, and we were working for a publicly traded company in Miami called CHS. Stock symbol at the time was CHSC. And those guys were international computer distributors in the world, in Latin America, in Europe, everybody. Because I spoke 3 languages, this is a job that I found in Miami, and this is how I got in the stock market, guys. I was friend with the investor relationship. I was going down the first floor and talking with them as I had stock. I talked with the directors in the company. I really got into the stock market like this because they were friends with hedge funds people and stuff. And this is how I started at JP Capital and over trading, got my license at the time, 55, 63, and 7. Okay? So I started the business working for others. I didn't have enough money. I didn't have enough savings. So I was getting a cut, everybody, on my profit. And the cut was 70% for me, 30% for the firm. As I became a better trader, it was 80% for me, 20% for the firm. Now, you guys have YouTube videos. You have crazy Frenchmen on a Thursday night trying to help you with all of this. So you have so much knowledge that I never had at the time. You know, at the time, we didn't have YouTube. We had to go in library. I used to go in Barnes and Nobles learning everything that I knew about the world in real estate, about the stock market, everybody. So I went and I had to work for someone. See what I mean? So the people who join our mastery, you know, our small group, when I take 50 guys under my wing 2 times a year, you know, this is a treat because there was not such a thing at the time from people who trade real money, real account with proven track record. It did not exist, everybody. So I had to work for someone, prop firm, it's called a prop firm, plus, and there's still prop firms these days, plus hedge funds. Then what did I do? I went and created with my profits, right, my company. Started a software company, right, day trading zones, think wealth differently, which will be soon invest zones, right? And we do zones, trends, market and analysis research for institutions and the retail traders like you. But there's a difference, guys. It's not just a software company where we produce software. We have a Pro Tool and the double cloud tools, and I'm not going to even go there tonight, plus an iPhone app right there somewhere, right? It is also that I trade, that we as a community trade real money. We test our stuff, well, we have losses, we have winners, and there has been years where I have been winning, there has been years where I have been losing, there has been years where I've been bleeding, but it happens that the last 2 years, guys, with the incredible volatility that we have, has been the most amazing years of my life. I've been extremely lucky this year, and I don't want to, overdo it either, throw it on everybody's way, because a lot of people are struggling, but it took 27 years, guys. So all the path to make this type of trades you've seen on the stream, on the SPY desk, it's 27 years. So think about it. If you take my SPY trade, by the way, for the people who don't know, let me show you. I'm going to show you my Thinkorswim account so that we talk bananas with bananas here, right? And so quickly, this is my day trading account, right? Go to the monitor tab, and you look at the monitor tab for the year here. And I happen to be lucky, but lucky you are lucky because you train and train and train to do $686,000 profit on the SPY this year, guys. But think about it. 27 years to make that kind of profit. This is the best profit that I had in my entire career. This is not a lot of money, guys. Look, if I go take $686,000 divided by 27, that's a lot of persistence there. Could have been made probably more money having a job, okay? This is the equivalent of, look what it is. And this is why I'm self-deprecating, people. I don't take myself super seriously here, unlike people who would brag and brag. But look, if I take $686,000 and it took me 27 years to finally do it, it means that I made an average every year of $25,000. Do you guys see that, everybody? Yes or no? So, see, it takes time, guys. It takes time to make wealth, and you need to manage it and approach it with the right alignment with your life energy, everybody. And, oh, I'm sorry, I thought you were seeing my screen. I think you didn't see. You have to approach it, everybody, with the right energy and an alignment with your life purpose. So let's continue some of the principles, because that's not the point here. I want to be humble enough to show you that 27 years to do that, you divide that by 27 years, I was better off working for someone almost. See what I mean? But this is really to point out, guys, that it takes time to be very good at what you do. And that's the key. It takes time, I repeat, to be very good at what you do, and you need to be gentle and patient with yourself. And people these days have no patience. We live in the generation of everything is due, and everything is due now. And it's not like that, guys. The world doesn't work like that. Nothing works like this. The money I have done here, it's not like that. Okay? So again, we talked about real estate. We talked about the prop firms. We talked about me creating the company and helping you guys as much as I can during the week. And my passion is really to help people and traders to go from where they are to where they want to be, guys. I could sell the software all day long and have less headache of time for money, but it is something that I enjoy, guys. I truly enjoy. Instead of coming in my PJ, look, I put my beautiful shirt tonight. I put my hair nice, okay? I don't need to look like a schlub, right? And so you guys keep me accountable now for the past 20 years that I have been helping the retail traders, guys. So A couple of other principles that are important on the wealth, everybody, obviously, is the fact, especially in trading. I showed you a case study with my Amazon, everybody. And by the way, if this is helpful, your likes, comments are super appreciated, guys. I'm doing that really to help you guys. And I'm not going to talk to you about the room. I'm not going to talk to you about anything. I just enjoy talking about those stuff, because this is the stuff that counts at the end of the day. So I talked about that case study. I'll go quickly again. My brother and I, long story short, my brother and I bought Amazon 100 shares for $317. We put about roughly $16,500 together. We split it, the cost of this. We bought it in 2014 in November. And now I have 100 shares in Amazon, in which I'm able to sell cover calls. Well, it's pretty cool because, look, if I go back to the option chain, and that's fairly passive, by the way, in the options market, right? And I was doing that especially lately with where's the account? So let's go here. So I was doing that lately. By the way, if you go to the trade tab and you look at Amazon, and so my brother and I have an investment account at Fidelity, and if you look at 100 shares here, and I go, let's say, July before the earnings, and I say to myself, well, by the way, I'm not saying that because it's a little too late. I've already sold the call. But I want to show you how much money you could get. And I say, look at the day trading zone resistance, and I look, okay, where is it? Well, first of all, I don't even know where it is. So I would have to pull a chart. I pull a chart here, it's 3,600. So I'm saying to myself, okay, if I can go 3,600 plus a safety of margin around 4,000 and get some premium, I'm taking it. So I go, and 3,600, I'm making $43, which would be $4,000 or $4,700 in 100 days, which is not bad, guys, considering that I invested only $300, right? And you do that enough, you do that enough time during the year. You do that 3-4 times during the year, guys, and this is how you make a lot of money, because this usually gives me an extra income of 18,000 on the low side every year since 2014 to 36,000 on the high side, just using my asset again. And the asset now becomes an income producing asset by selling the cover call. I have the asset that secures selling the call. The only problem is if it goes above the 3,600 here, I have the obligation, not the option, I have the obligation to give my 100 shares to someone, which my brother doesn't want, and of course, and me too, because then we would have to pay a lot of taxes. So you got to be careful when you sell calls, because you end up either losing on the short call if you don't do it really at the right shift of momentum at resistance, when it's at resistance and going down, or you end up rolling a new one higher, and I don't like that. That's where you start losing money. So that's one of the pitfalls of the people doing the trifecta of income. Okay. Another thing that is important, everybody, right, is besides the stock market, selling the puts, doing the trifecta, right, is understanding power of compounding. And I know I show you that all the time, but we are going to get to the philosophy of the book that I want to share with you. This has been a great book for me. It really helped me and explain to my kids different ways. But if you put $5,500 into a Roth IRA and you put an additional $5,500 every year, by the way, now you can put $6,000. So this slide will have to be updated. It's even better. And you grow it 20% for 20 years, like Warren Buffett, you have $1.4 million. So it's all about rate of return. If you can match or beat the rate of return of Warren Buffett, which I don't promise you. You is you, me is me after 27 years of doing it year after year, day after day, guys. But if you can match or beat Warren Buffett, everybody wants 200%, 400% in one day. Don't look for the 1 or 200% in one day. Look for the consistent 20% plus rate of return. And in 10 years to 20 years, the mathematics of compounding will take care of itself, everybody. I repeat, the mathematics of compounding will take care of itself. No matter how old you are, if you're 50 years old, give it 10 years. Give it 12 years, 15 years. You are not in a rush. It will work, but go slowly, guys. I don't promise it, of course, but the mathematics are there in your favor, guys, with time. Time and return. If you want to have less time and you want this to be 10 years, then you better have this being 30, 40%. And then that will work too. So it's time and rate of returns to be really wealthy and compounding effect. Now, what I love about that book is this. Let's go back to the main slide, or maybe I can take this slide and recopy this slide here, because this is so important. So let's go back here, because this is stuff I have not really mastered till I was 37 years old. So here is Mark. I came in the US, I was 20 years old, I think, or 21 years old, something like this. And now it's Mark 49 years old, guys. Okay? And there is the aha moment. And this is what I'm trying to help you with tonight. Aha moment. Especially if you are a kid tonight. Even if you are 50 years old, doesn't matter. The key is to have the aha moment. But if you are less than 37 years old, I appreciate your likes and comments, because you will remember the French guy. You will remember tonight's event. You will say, this crazy French guy, but this helped me. So between 21 and 37, I worked really hard, guys. I was in prop firms, I was in hedge funds, I was also working other companies, but most importantly, I've always been in the market, right? And I was working hard. I was working with people. I had a lot of stress, because in hedge funds, I have news for you. When you work in hedge funds and you work in prop firms, if you don't do what they say, you have no job. So it's a little bit more difficult than you guys trading with your own money. It's a luxury trading with your own money. But I have great years. I had bad years, and et cetera, et cetera. Not during the hedge fund, but during the fact that I went retail trader when I started being retail, right? And I couldn't really, and one day I went to my accountant, my CPA. My CPA asked something that was very profound, because I always thought all those 401k, those IRA, that was bullshit. Excuse my French. I thought I didn't want the government to, and I still don't like the government to control my money till I'm 59 and a half. So my philosophy was to pay every year, pay the tax, and reinvest, and then pay the tax. So that was like being in the right race. So let's say I have a 100k profit, right? I'm being taxed 39k. So now I'm left with what? 61k, right? And then the next year I bring this 61k, let's say, to only 125k. And we start again. They keep on bringing me down and down and down. That's the right race, right? It goes like this, like a treadmill. Right? And this is really what I couldn't understand. I had decent income, but I kept on paying taxes, and I kept on going down, down, down. This is why I want everybody, when I talk about the day trading zones, think well differently with tax efficiency and asset protections, because that's where the moment came up. So I changed my accountant. I went to this accountant, 37 years old. We sit. And she looks at me and she says, how much do you have for retirement? I'm 37. 37, I have 2 kids, and needless to say, now I have 5, blended family, right? 1 football player, 2 baseball player, right? Everybody. So she says, how much money you have? I have nothing. I have no 401k, because I was an entrepreneur. I had my company my entire life. I work also as a 1099 for the hedge funds, So I was either a K1 partner or a 1099 with the hedge funds, K1. They gave me an LLC K1. I had nothing. I had nothing to show for, everybody. All I had is cash at the bank, right? And I had some investments, but all I was doing is the day trading and the swing trading. I was not doing the long-term investing, people. I repeat, I was not doing the long-term investing. So from 21, 22, when I started in the market, to 37, I mostly did swing trading, day trading, and I had cash. And yes, I know you are going to tell me, but Mark, in 2000 and I don't know which one, but 2000 something, you posted your interactive broker statement. I had close to $1 million there, and I had some investment at Fidelity and Interactive Broker and stuff like that. Yeah, but I was how old was I? 37 is 12 years ago. 2008, guys. 2008. So for 6 years that I was helping the retail traders, guys, in options and stocks, I was not really accumulating a big portfolio, guys. I had some Disney, which I always had. I had some public storage, which you can see in those screenshots. I don't know if it is still available on the old site trading.We, but that's it. I really didn't have a lot. I did some videos with those two on the old channel trading.We, but I had some dividend stock, I had some bonds, but it was not really huge. And then here's what the aha moment came up, guys, is to use the solo 401k. If you are an entrepreneur, at least match that with your employer, because your employer pretty much gives you a 50% rate of return on 3% of the money or 6% of the money, right? Defined benefit plan, if you make a lot of money, this is a great one, the defined benefit plan, because the defined benefit plan allows you to put $250,000 aside per year, tax deferred. So instead of going like this, boom, the tax gets me the right rate. Go here, tax gets me, I'm here, tax gets me, and I go in nowhere in net liquidation value or true net worth, then I started doing the 401k defined benefit plans. Plus, there's a huge advantage to those, everybody, and it is that the solo 401k are ERISA protected. So if you are multi-member LLC like I am, ERISA protected, and your defined benefit plan are ERISA protected. What does that mean? That means that the federal law in the United States says that if you have creditors, they cannot touch your ERISA plan. And the best case of asset protection, I always tell you in the US, is the case of O.J. Simpson. Remember O.J. Simpson? The Goldman family got a multi-million asset case against O.J. Simpson. But O.J. had the fortress. He had a very solid pyramid 3, the wealth pyramid I call, or the wealth account. He had defined benefit plan, ERISA protected, with an annuity paid by the NFL of about $400,000 a year that cannot be attached and garnished by creditor. Plus, he had a $600,000 home in Florida, which is 100% homestead protected, which means creditor cannot get it. So there's laws in the United States, guys, if you consult, and I share with you stuff that I pay $300 an hour, $500 an hour, that ethically and legally you protect your wealth, guys, by just living in Florida. Your equity is protected just by using the right IRA, not IRA, 401k and defined benefit plan. So you're going to ask me, Mark, what about protection on your IRA? That it depends. That's state specific, and you need to consult with an asset protection lawyer. It's state specific. Or you can do a Google search to see if you have any asset IRA protection. Another one that is protected too is life insurance. Life insurance on the next wealth event, because we're running out of time, guys, I will share how I use life insurance, as they call that infinity banking, on how I can use my life insurance cash value to invest in the stock market and in the real estate by getting paid and have all my stuff tax deferred and still have some protection. There's state protection for cash value life insurance as well. So you got to understand the type of assets, guys, that are going to make you wealthy. Understand the taxes that are going to help you. Some of the easiest taxes to understand is have an HSA account for your health expenses. Use and maximize your 401k if you are an employee and the matching plan. Or if you are an entrepreneur, it's even better, because now you can go defined benefit plan. You set up with a management company for a defined benefit plan, an administrator it's called, and a solo 401k. And that's it. And you can tax defer or tax free, or especially tax free also with the Roth IRA. If you don't make a lot of income, the Roth IRA is a great one. You pay tax now, where the tax are lower, but those all the trillions of dollars that we are ramping to pay for the COVID crap here, someone will pay. And that someone, everybody, will be your kids, my kids, and my grandkids, everybody. So let's go over the philosophy of the book, or a little bit in terms of the book. So the book is all about life purpose, and it's all about, what makes you happy and how you align your expenses, with your Mint. You use your Mint app to follow everything. And it's all about energy. And by the way, if all I am sharing with you is helpful, your likes, comments are helpful, it helps us with the algorithm, and it gives us also more envy to help you more, guys. Just if we come and I bang my head against the table, it's not appreciated, Okay, keep moving. So the energy that we spend for work, right? It's your time for money, right? And so what it says is, and think about it, I always say that, we have an average age of 78 years old, everybody, and that's not from the book. We live about 78 years. I'm 49. That means that I have 29 summers left. And more or less, I might pass. 29 summers left in my life. So money is not the most important thing, because money comes and goes. But what money does, that's what's very important, and what the book really helped me, your money or your life, and I'll give you the link before you leave. As a matter of fact, I'll give you the link right now. Well, let's wait, because then you'll be running out and you will not pay attention to the synopsis, because I might even avoid you to read the entire book. What the books really tells you is that your energy is your time, and your time is finite in life. So you really want to spend money to the stuff that you are aligned with. And it really talks about the concept of what is enough. When you spend, you have needs and wants. You want to go to sushi, that's a want. But do I really need to go to sushi? Could I eat at home a salad with my wife? Perfectly fine. Is that enough to eat at home with my wife and be happy? Okay? So it talks about what's enough in life when you spend, to keep your wealth and grow your wealth, of what's enough, what are the needs versus the wants. But it really aligns the fact that, look, we have finite years to live. I have 29 summers left to live in my life. And it is time to do what makes me happy. What's important to me. Like, to me, it makes, believe it or not, even though I'm not getting a lot of likes here, it makes me happy to share with you guys. Because hopefully, if I make an impact on 2 guys tonight, 3 guys, 4 guys for the rest of your life, then I did something good, guys, in the world. That's, you throw good energy, and hopefully the energy comes back. If it doesn't come back, it's fine. But you did good, right? So, what makes you happy? What's important to you? What value will you never compromise? Now, I like this one. If you had $1 million right now, what would you do with your time? And you have to answer that. Would you still day trade? Would you still invest in the market? Or would you do something else? Try to figure what it is that is bigger than yourself. Will you ever have enough money to retire? If someone today raised all your debt, would you dig yourself in that hole again? And how? And how not to? So I think those are profound questions. You'll have to see the book is just like this, and it helps you to really understand your life purpose. And it defines life purpose. And I had different pages in the book. Hopefully the book is there. And you can see I underline, I read. That's what I do. I don't know if you can see. I underline, read, underline. Look, it's the end of the book. Still underlined, I don't know. Right. So the life purpose implies something that is beyond reason. It isn't simply achieving a goal or acquiring some long possession. It's a chosen dedication of your life energy to something that you believe is more important than your individual identity, as surely, or your individual little existence. It is your commitment. It becomes your identity as surely as your name, your body, or your story to death, and can become more important than life itself. Why is that important? Because if you do that, like for me and my wife, we like to travel, and we like to align expenses to traveling, right? So let's say that, by the way, that's not my net worth. It's just a screenshot I took on the internet of Mint, okay? So let's say I look at my Mint. I look at my cash, I look at my net worth, I look at my expenses. And let's say I just spent $400, $500 with friends for dinner, okay? In a nice restaurant. Although I am a foodie, so it's a bad one because I love to eat and I am a foodie. But let's say I went to a nice dinner. Could I have aligned this $400 to what is my passion, which is traveling, hiking with the kids, and do a nice trip with the kid and redeploy that 400 to the stuff that I am in line with my purpose. What is my purpose? It's helping others, to achieve wealth. You see, obviously I'm here banging my head tonight, and also traveling and creating memories and experiences and a legacy for the kids, for our family. But helping other, there's a lot of satisfaction, guys, in helping others. Be a big brother in your community. Do something good, guys, with your knowledge. This is why I push the successful trader in our community. Listen to the interview, top trader Adrian, to go and speak to all those guys that are doing extremely well financially in their life, and to give back and do some good in the community. But a good part of the book that I like, and let me give you the link of this book called Your Money or Your Life, is it doesn't approach the book as a tactical book for real estate or a tactical book for the stock market. What it does, and it helped me a lot also seeing the things differently, is approach the market, guys, as and money creation really as a philosophical approach, and I thought it was super helpful. So go here, it's called Your Money or Your, and you can click the link and you support the community at the same time. You can get it on Amazon. It's only $13. So if it's an affiliate link, we might get 13 cents, everybody. But this is a very interesting book. I felt this is like the only first book, and I'm 49, so I read it at 49. This is a book I read, I talked about this book with you guys in January, that made an impact on how I should have looked at money for a long, long time, guys. So hopefully this is helpful. This is going to help you. This is an advertising, Your Money or Your Life. But no kidding, it's a great book. It's $13 on Amazon. And it really helped me. It's not going to tell you how to buy real estate. It's not going to tell you how to sell options, do the stock market. It's not going to talk about zone. It's not going to talk about entry and exits like all our videos. It's just going to give you a mind frame, a philosophical mind frame to take care of your money, track your money daily, get out of debt. Also, it talks about getting out of debt and how you water that plant, your wealth plant, because at the end, it's all about being aligned to save energy, life energy, and time that will be aligned with your life purpose. Okay? I hope it was helpful, everybody. I love you all. Hopefully, a lot of people will be able to watch the replay of this wealth event. This was our second wealth event in the last 2 months. I love you all. I'll see you next week in the weekly pre-market game plan for the stock market this time. Take care, everybody. Love you, and have a happy Good Friday tomorrow, and have a great weekend, everybody. Enjoy your family. Bye-bye.